Now we're going to get back to the economy, I think. Good, here it comes. Iran's capabilities are over, and that country will never be the same. And that's the subject of the riff. Now, stocks falling, oil rising, a lot of bears crawling out of the woodwork. Most of the media would have you believe the U.S. is actually losing the war to Iran. Among the most disgusting examples of that, The Economist magazine, with a cover headlined, "Advantage Iran." Oh, my God. Not only is this left-wing media disreputable hogwash, but the so-called bear case to sell stocks, buy oil, I think will be proven very wrong. Here's my basic point. I'm going to make it nice and simple. One way or another, all of Iran's capabilities will be destroyed through military action, whether there's a deal or not. And one way or another, our military will soon take control of the Strait of Hormuz again through military force, whether there's a deal or not. And finally, Iran will never be the same when we are finished with it. Now, my hunch is, like the Venezuela story, the U.S. is going to control Hormuz and any Iranian money from Hormuz and the disbursement of that money. That's what I think is going to happen. Even more, these outcomes are going to happen sooner rather than later. And that's why I think investors should be buying stocks, preferably, you know me, the broad index, and they should be selling oil. And by the way, hold the index for 100 years, or maybe 200 years. In fact, regarding oil, kind of interesting, the 12-month futures contract for the WTI West Texas is down to about $75 compared to close to 100 in the spot market. That tells you something. And by the way, people in the oil business tell me the marginal cost to produce the extra barrel of oil somewhere in the low to mid-60s. So the futures are not all that far from the ultimate production-based pricing. Here's another point for the stock market. Profits are booming. Forward-looking profit estimates for the S&P well over $300, which gets you to something like 19 times earnings, which is a fine multiple. On top of all that, the one big beautiful bill is a supply-side stimulant for the economy that is going to boom in the post-war period. Let us not forget. Tax cuts, 100% depreciation, deregulation, drill, baby, drill, fair and free reciprocal trade. Also, inflationary expectations seem to be looking right through the temporary oil bulge, all right? The 10-year CPI break-evens in the TIPS market haven't moved at all. They're hovering around 2.3%. The five-year forward inflation has remained barely above 2%. And even gold prices are falling, and King dollar is rising. Even the price of natural gas, which is really the global clean-burning fuel of choice, hasn't budged from around $3 during this whole period. But my basic point against all this media misreporting and self-seeking bears is that the U.S. is going to take control of Hormuz. That's going to settle down oil markets. And the U.S.-Israeli coalition will be ending all of Iran's capabilities, and it's not going to take much longer. That's a riff. All right.